Welcome to Successful Trading. In today's video, we are going to show you how to use the VWAP or volume weighted average price to set up a winning trade on Qualcomm. Here's the chart of Qualcomm that we are viewing from TradingView. This is the 15-minute interval chart, and we are going to use the replay button of the tool as we have done in previous videos. So in this case, if you notice that yesterday pattern and today pattern look alike, yeah, I noticed that as well. That's one of the reasons that's actually we're expecting a similar move on Qualcomm. So let's go ahead here and change the time interval to 5 minutes maybe. So that's how you do that, and minimize it here. So we have yesterday here, January the 9th. On starting here, we have January the 10th. The time zone on this, my local time, is Pacific time zone. So you're going to see 6:30 instead of the standard 9:30 at the New York Stock Exchange. So here the replay button, as usual, we are going to jump to the beginning of the session here. So by clicking this candle and actually doing that twice, we have learned that now. Okay, here we go. So when we are ready, each one of so since our speed is 5 seconds, every 5 seconds we will have a candle of 5 minutes. So Qualcomm closed on the 9th at 89.91. So let's see how the trade. I'm going to stop the video to identify places of entry. So here, I mean, we can pretty much look at it here, since we already knew if you were to just come in on a Friday, you want to trade Qualcomm. One indication will be Qualcomm here yesterday pretty much had great respect to the VWAP. VWAP is the orange line that we can read on here on our data window. So these windows here, we have showed them in the demo of TradingView. So you have several windows on here. So typically I focus on the data window, hence I'm able to read the open, the high, the low, the close, the exponential moving average, as well as the middle of the Bollinger Band. That's the white line in between. The upper Bollinger Band is in red, and the lower Bollinger Band is in purple. The volume weighted average price, which is the indicator that we are focusing on today for this use case, is the orange line. You can get that on any time frame. That's something that actually TradingView added recently. So here, if we go to our play button, we are ready, and we will be getting a candle every 5 seconds, and each candle has a duration of 5 minutes. Okay, so here's the opening. Let me just zoom in. So Qualcomm opened about at 90.60, meaning it gapped up, just like the rest of the market. And it posted a high of the day. The first high of the day was at 91.06, actually. So 5 minutes, 40 minutes, not 5 minutes, about this one will be 25 minutes into the session. It was pretty much around that, and then it did this. So let me stop right there. So if I stop right here, this is 10 a.m. Eastern Time or 7 Pacific, as indicated on my chart. So these two candles pretty much are, each one of them, it's a 5 minute interval. So within 10 minutes, Qualcomm went from 91 to the high on here, which we can read again on this window here, 92.28. So at 7:07, that was my trigger to make the entry for this. Why? Well, so here's our VWAP. The way that retail uses VWAP is not quite the same as the big institution. a VWAP is supposed to represent the fair value of an asset. What does that mean? Meaning that when the asset is trading above VWAP, or the volume weighted average price, it's actually considered that it's expensive or it has gone too far. So in typical retail thinking, so being above VWAP is bullish. Yes, that's true in a certain sense. But when you go too much above VWAP, then actually that's mean that you are way further, you're way more expensive than the fair value. And the other reason here, so the volume weighted average is about, on this candle, is about 91.43. The stock is trading at 92.28. Look at the moving average. Let's make more sense intuitively about the moving average. So anytime a stock is very far, especially within the first 30 minutes or 35 minutes of the open, this far, so Qualcomm right now, it's literally almost like $2 above the exponential moving average 20 period. The third reason here will be, this is an indicator that we haven't used that much, but it's the RSI. So this one, the relative signal strength, anytime that's above this dotted line of 70, it doesn't have to be always the case, but that's a sign that a stock is running a little bit hot. So this is the criteria that led to my entry into this trade. Also, the other reason is that the pattern on the 15-minute chart, as you saw in the beginning, I'm going to flash it maybe toward the end, look very similar. So my entry happened to be somewhere here. It was a little bit in haste. I have to agree. I can Monday morning quarterback it, but that's the reason why in the trade. Always ask yourself why you are in the trade, and it will help actually either be a little bit more patient or actually determine the validity of an entry in a trade. So at that time, that was our entry because of the position of the price at which Qualcomm was trading in relative to VWAP and this volume weighted average. So if we continue the tip, then let's see what answers. So as of now, we have a high of the day at 22.28, a slighter high of the day at 92 rather 36. So I'm reading this candle at 710. And from that point on, let's see if Qualcomm actually going to go back and test those high of the day. A stock that's bullish typically will go and establish new high of the day. If it starts going sideways, chances are it will retrace. Retracing is the phenomenon of coming back to a lower value, in a sense, if it has gone up originally. So as of now, we have had 7 candles pretty much of 5 minutes each. So that's 35 minutes in which Qualcomm is just doing sideways. If I stop, let's take a stop here and do this. Let's do a side-by-side view as you have been accustomed to on this channel. So I'll actually do a side-by-side view looking at the movement of the stock in reference to the option. So our entry, I will show you my exact order shortly at the end of this. So the entry being at 7:05 Pacific, that will mean 10:05. So here's the entry here, not that great of an entry. So somewhere here, and we are looking at the price on here. So this is 16 cents entry per contract. And if you actually follow this, each one of them is 5 minutes. The bars represent actually the volume of contract that are being bought and sold, if you will. So that's also an indication on there. I'm gonna show it to you on the option chain after we are done with this, because when you are taking a position, it's actually good to see that it has volume, because two things: it kind of confirm that the position that you are in is the right position. The other thing that it does when you have great amount of volume in a position is the fact that you're going to have liquidity, meaning that the delta between the difference between the bid and the ask is not too much, so hence you can sell back those options relatively easily. So let's keep an eye on here. All of this sideways movement, as of now, we are standing at 8 Pacific. That will be 11 here on this right hand chart, where we are looking at the Qualcomm January 10 91 puts. You can read that on here. This was the closing price, so don't worry about that as of now. If I were able to replay this pricing, as we are able to replay the movement of the stock on TradingView, we will actually see it moving, but it's static here. So the TradingView side give us the price of the stock as it was moving during the live session. So look at all of this side reaction. So at some points here, actually, the position goes down by 50% almost. Not almost, literally. Look at it here. 805 by then. Why? Because this is a contract that's expiring on the same day. So theta, as time passes by, will actually make it that the value of that contract will be decreasing. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. That 55-minute during which the price is not going in our direction. So we continue playing it. I want you to observe the reaction, the behavior of the price in relation to VWAP, which again you can read on here. That line, 91.74. It goes through a test. Okay, right there. This is the candle that kind of confirmed the move. But now it's even outside the lower Bollinger, but the movement has started really. So a great entry here, or for a patient person, could have been here. The first time here after it dropped below both, actually all the VWAP, the exponential moving average 20, that's the yellow line, and it just continues here. So now here, after this confirmation, you have something. Let's stop here. What's happening here? So now it's, what time is it? It's about it's 9:10, so almost a couple of hours later. So it took this position a full hour to actually start going, and when it started going, we go from 92 to 91. So let's see, where's 91? These are the 91 puts, so meaning that this is the time at which they get into the money. So the question on here then will be, okay, when do you decide to sell your contract? So for now, let's just go through the move completely, and then we will review exactly how I handle the trade. Okay, came back to trying to test the exponential moving average 50, got rejected, and continued lower. This is typical of stock movement. So have to test resistance. If it's successful, start going above. If it cannot, it will go lower. When sideways actions start like this here, and you're in a short in puts situation, meaning you want the stock to be going lower, that's not good for you. So meaning 1, 2, 3, 4, 5 candles, 6 candle already. A decision you need to make a decision on here very quickly, actually, maybe after this candle, because this candle, the close is above the high of this other candle. So that's just reflects that traders will have, meaning, oh, I get it out of my position if, so that's determined in advance. Now it's going back up, so that's definitely not something that we want in that position. So let's see if we were still in the position overall. So let's get this here. Let me minimize this and see now how we handle the trade. But before we do that, let's go take a look at the option chain. I think, yeah, I've done a video on what's the option chain. You can catch it on this very channel. So, and I think I use this very platform. So for those who caught that video, you will be very familiar with which that we are looking at. So here are the 91 puts for Qualcomm expiring on January 10, as we explained. I am coming here to bring your attention to the volume. So obviously this is the volume at the end of the day, because that Qualcomm move actually ended up being very profitable, as you saw on there that it closed at 91 cents when it was actually trading very early. I think after an hour of trade, it was trading at 7 cents. Yeah, that's the type of opportunities that exist. So buying a contract at 7 cents, and by close of the day, each selling it at 91 cents. That's something. So a great deal of people were able actually to trade, because let's take a look at even the lower strike. This is for Friday, for expiration Friday. That's a lot. So meaning this move got the attention of a lot of traders. So you can observe the volume when you are about to enter a position, or that could be actually catalyst into taking a position when reading your option chain properly. So if we go back on here, so Qualcomm then did something that most stock did today. Well, change direction, fake as if actually now it was going to be bullish, although it's still below VWAP. Anytime that a stock is trading below VWAP, be careful about considering it's bullish, really. So Qualcomm will do that, but actually eventually it will start coming down again, which could have actually been... Actually, let's play this video and learn something from it. I'm going to maximize, and then just for purely education purposes, we are going to determine if you can spot where the next trade is actually as this thing is playing. So right now it's passing both the exponential moving average, the 20 period and the 50 period. And notice the reaction. It could not successfully close 2 candles above that. When that happened, it's back down. 90.73, within the vicinity of both exponential moving average, the 20 period and the 50 period. Nowhere near the volume weighted average price, which stand now at 91.55. So we got into more sideway action again. So 8 candles of 5 minutes, that's 40 minutes where not much happening. Neither the bulls nor the bear have the upper hand, so it's just one of those. This is known as just theta eating and killing both the bearish, the calls and the puts, pretty much. But here though, something's happening again, because now one thing to notice is when a stock starts posting a new low of the day. That's the case here, right there, 90.26. So meaning that this actually got rejected here at 91, almost 91, 1996 was the high, 1994. And now 90.35. Even this type of small move actually it's worth something on Friday. So that's why I wanted to share that. Hey, for those who are patient actually on expiration, there are a lot of opportunities that tends to be available. This is one of them here, meaning so originally, if you were quick on your feet, you would have made an entry somewhere here, but that's tough because maybe you had the position from a swing from the previous day. Then you sold it somewhere here. Because I'm not sure exactly what was the catalyst for those 2 candles, to be honest with you, because that was just out of the blue. And then you can notice after that, nothing, Qualcomm never managed to get higher. But here is a clear trade, meaning this candle right here at 8:30 falling below the VWAP. It gives you a nice trade to benefit from. And then from there, the rest of that is sideways. The replace finish. So let's review my execution of the trade. So the entry was at 7:07. So this is my trade as I captured from my broker. I get alerts. I receive alerts that are automatically set up when an entry is executed or a sell is executed. So I get those alerts on my mobile and on my email. So I'm showing you a capture of the email. Here is the entry. Again, for the purpose, just for the illustration of these video, that's how these accounts are set up. So it is to show that, hey, not that much capital is required actually in option trading. Qualcomm is trading at $91. If you were to trying to buy that stock, you needed, yeah, close to $100 to trade this contract. The capital is not even a third of that. So that gives you, that's the type of leverage that option do provide. I've had questions, many questions from people about, what can I do with this small amount of capital in the stock market trade? Learn how to trade options successfully. And this is the reason why I purposely set up this trade in this manner, to showcase that the amount needed is not that high for requirement. For proof, this was, as we said, right, this very contract closed at 90, what was the close price on here? We still have it here, 91 cents. Yeah, 91 cents, and it was as low as 7 cents after about 90 minutes into the trading session. So 10 times your return, more than 10 times your return, if you were to pull that off today on Qualcomm. And these opportunities happen more frequently than people happen to know. I will be sharing later on this year the reason why stocks such as Qualcomm and others that we have depicted and highlighted in the blog are the best stocks that you can use actually for option trading. There is a reason behind that. I'm yet actually to sit down and put all of that great tutorial together, but that's something that will be coming on this channel. So 7:07 was our entry, or 10:07 Eastern time. So let's go take a look at that on the chart. So our entry was somewhere here. We say, well, no, somewhere here rather. We show that. And then as we practice, if you're familiar with the technique we use for exit of our position, we do what we call scale exit, meaning that we exit we do not exit the position, all of the contract at once. We start taking partial profit. So the rule of thumb is usually after 100%, we remove some of the risk. So that was what was done on here. Not exactly quite, because that will have been 32. So we got that through a limit. I'm going to be writing very shortly here an article on the type of trades that exist and illustrate that through a video as well. So if you're not familiar about what a limit type trade is, you will learn about that in that tutorial. So 90% gain between 7:07 and 8:50, and then we let the trade run. I want us to look at a chart. So let me go back. I want us to look at the chart and see. So what's the time? 8:50. What exactly was happening with the stock at 8:50 on this chart is here. Okay, here we go. This is important. This is if there's a second takeaway out of this tutorial, this is it. The reason for taking off 50% of the risk is this candle. Yes, obviously with Monday morning quarterbacking, it would be, oh, you could have just held. I mean, just a couple of candles later. Yes, it's true. But here's the thing. This candle, it's at support. Okay, so here's the first bounce on the support, where the stock indicating that support again is exponential. The green line is exponential moving average 50 period. Those are natural supports and resistance I've mentioned already a few times in these videos. So here's the bounce where it closed above. Here's the second one where it closed above. It's Friday. If you have 100% gain or almost, why not walk away? Or at least take the risk off, which is the reason of the exit here. So by exiting a 50% of the position here, I ensure automatically that this was going to be a winning trade. How? If we go back here, here's my total risk, 16 times 2. Well, at this level, I know pretty much that what happened with this remaining contract, I'm playing with the market maker's money. So that's the reason for exiting there. And because of that, hey, this is natural. But obviously, the trend carried on being bearish, and we still had one contract, which we carried out. And that contract actually rewarded us because we exited the final contract. What's the time here? 9:28. Sorry, it's not that visible. 9:28, which means that a good 40 minutes after selling the first contract. And it was worth our while because the gain almost triple. These gains here are almost the triple of this. So that's for us, that's the perfect execution on there. That's is how exactly to execute a scale exit. So the time was 9:28 or so. Yep, 9:28 because of this candle. It's not a coincidence. The close here is above the high of this previous candle. That's a change of direction. So actually, as I recall being live, I think the position was worth 70 cents right here. But at that time, having just one contract, we were willing to walk away and come fight another day. That's typical. If you were, my recommendation here is usually to have 3 contracts. If you were to have 3 contracts, then yeah, you sell then the second one on here and maybe the last one as it's really going through sideways. Again, the other reason being that on a Friday, theta, which is very, very, very important and sensitive on option pricing, make it very difficult to stay in position for a long time. On a regular day when you do not have expiration, oh, sure, you can stay in this position and just say, hey, it may bounce off of this. But despite all of that, actually, it closed at a much lower price. So the stock closed at a much lower price, and those who were able to hold, though I'm not sure if your broker will allow you because the 91 puts are in the money at 90.20 something, so they will have closed that position for you. That's the bad thing about holding position that expire on the same day. So in summary, we showed you how to use this volume weighted average price indicator to identify trades that you can go into, and through the noticing that, hey, a specific contract or it's having volume, meaning it's more traders are interested in that position, can give you confirmation. And the third thing that you saw in this trade, in the execution of this trade, is how we successfully apply the scaling technique into selling our option in batches. So hope that you enjoyed. Please subscribe, like, input your comments, and we will make sure to continue to cater this channel to your need. Thank you. Have a good weekend. Bye-bye. Welcome to Successful Trading. In today's video, we are going to show you how to use the